So what you've done, and it was always going to happen, is Bitcoin's now become financialized. When it wasn't really, it was still had purity to it. Now, it doesn't mean it's impure because of this, but you've allowed a financialization layer. And what that's going to mean is that they are going to offer leveraged products on it. Now, options are, I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades.
As we navigate the 2024 and 2025 market cycle, renowned macro analyst and Real Vision founder Raoul shares his fascinating insights on the future of Bitcoin. Pal presents 3 different scenarios, each with a bright outlook and different levels of excitement for the top cryptocurrency. Raoul's first scenario predicts a trajectory similar to past cryptocurrency bull markets, with a stunning 240% increase that may push Bitcoin to a new all-time high of $150,000 per coin. Raoul, a seasoned lover for digital assets, confidently gives this scenario a 60% possibility. Surprisingly, this estimate ignores the flood of institutional money that has been enabled by the acceptance of spot Bitcoin ETFs. Raoul is still quite optimistic about Bitcoin, even in light of the current price stagnation that followed the ETF launches. In the least hopeful possibilities, he sees $150,000 as a new all-time high. Pal's most bullish prognosis, with a 20% probability, sees Bitcoin shooting up to an incredible $500,000 per coin if macro variables and crypto fundamentals line up perfectly. His second scenario, while less diminished, is still positive. In this video, we bring you exclusive insights from Raoul Pal's latest interview with Anthony Pompliano. The macro master shares his thoughts on how the price of Bitcoin will move up to and beyond the halving. Don't pass up the opportunity to learn insightful things about the future of the top cryptocurrency. For additional interesting stuff, don't forget to press the notification bell, like, share, and subscribe. Please feel free to leave a comment below. Your participation helps us develop as a channel and makes these important discussions more visible in the huge crypto market environment.
Always the most ridiculous thing happens in crypto. I mean, even the run-up was the best, right? That total goat rodeo of that tweet that was hacked. It's brilliant, and it going down is befitting. Basically, it's the overhang from GBTC. So there's a lot of activity, a lot of repositioning. Net flows have been offset really by GBTC as people are unwinding the arbitrage and stuff like that. So I don't think you need to read much into it. It probably has to digest. Don't forget, you brought forward a lot of demand. Net, what will we brought forward? $2-3 billion of demand? Okay, so that takes time for the market to digest. And then you got to think through who the RIAs are, who these people are. And if you put them in your head, these are not New York dealing rooms who are getting on the phone and saying, buy this now. They're people who are wearing slacks, who read Barron's on the weekend, read about the ETF, aren't sure, go on the golf course, see their best client. He asks them a question. The whole process is slow. They got to go and have steak dinners and all of that stuff. So the whole process of bringing people in is going to take a while longer, but it's there now. I just think of the ETF as a trade deal between fiat world and crypto land. And so now capital can flow in much easier than it used to. I kind of think of this as a mental model as like China entering the WTO when everybody could invest in China. That's what this is. Now, these aren't permanent residents in crypto land. This is more hot money flows, tourism flows, hot money flows, direct investment, foreign direct investment, that's VC flows. And then we've got a bunch of residents there, people who have wallets and all of that. So I do think of it as an economy, and this just allows trade. So if you think about the biggest buyers of this stuff is actually the millennial cohort. What the millennials do really well is they invest in their 401ks every month, and they can put this in their 401ks. So that's sticky. That's why ARK didn't get all the redemptions when it went down 75%. It's because it's millennials who own it and they put it in their 401k and they're in it for the long ride. So I think it's the boomer crowd who'll be more concerned about the volatility. I think that's a very good thing. There's going to be a lot of people putting it as a long-term asset, buy and hold, and that should give it the stability that you need, that you don't just get massive washouts from people panicking the moment it goes down. And I think most of the ETF providers have made it pretty clear that it's a volatile asset. I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land. And crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. So the Wild West will still exist, but the big daddy becomes less volatile, which, yes, it's a shame because we can't make as much money out of each cycle. But if our underlying philosophy is we want the adoption of this technology to be broad and deep, it has to go that way. So it's kind of good from that philosophical angle of trying to change the world, bad from the ridiculousness of the cycles and how profitable they can be if you get them right.
Raoul highlighted the unpredictability of the market by characterizing its recent surge as a total goat rodeo. Pal blamed the ongoing decline on the legacy effects of GBTC, Grayscale Bitcoin Trust, and the related actions and repositioning. Raoul Pal claims that the market is now processing a significant request that was made for $2 to $3 billion. He said that the market needs time to take in this demand and advised against making too much interpretation of the recent movements. Pal described cryptocurrency investors as a slower moving group that makes slower decisions than the quick-witted New York dealing room specialists. Raoul Pal compared the current changes in the cryptocurrency industry to a trade agreement between the traditional banking sector and the cryptocurrency space, referring to China's entry into the WTO. He saw this as a turning point that would enable more seamless capital inflows into the cryptocurrency market. In addition, Pal described the cryptocurrency market as a dynamic economy that receives cash in a variety of ways, including as direct investments, unpredictable hot money flows, and tourism-related activities. He saw a change in the demography, with millennials becoming major long-term investors that stabilized the market through routes such as 401k investing. Raoul acknowledged the possibility of decreased volatility, but pointed out the trade-off. Less volatility in the market might translate into lower cycle profits. From a philosophical perspective, he views this change as beneficial, though, since it fits in with the overarching objective of encouraging mass use and improving the influence of technology. If you liked the material, don't forget to press the subscribe button and give us a thumbs up. We are very grateful for your support. Let's return and see what Raoul has to say next.
I think there's a decent chance of that, but we need to see the contextualization of how the ETF flows impact, what's happening with monetary policy, what's going on in the economy, how the election's going to play into this. So that's how I'm thinking of it. That upside crazy bubble target, using that kind of everything code structure that I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250. But obviously, who knows? And as you know, the worst thing for any of us is everybody wants price targets, and then a year and a half's time they hate you for it because you weren't exactly right. Think about the crowd that got financialized in 2020. Again, mainly the millennial crowd, right? There's 110 million Coinbase accounts. And when I checked 6 months ago, only 9 million were active. So speaking to the guys at Coinbase, they're like, yeah, in normal activity, it'll get to 35, 40 million and the top will grow as well. So there's a lot of money still to come in of people who participated last time around, have that interest, still have PTSD, will come back in. So maybe that offsets it. I don't know. I also have a feeling the applications layer of blockchain is going to bring in a lot more use case. So I'm thinking of this cycle as maybe the everything everywhere all at one cycle, when people have different unlocks for NFTs or inscriptions or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. So it just depends how far that applications layer goes. If the applications layer doesn't make much progress this cycle, then you're dead right. We'll see rebalancing. Don't forget, they're also going to be issuing options on the ETF, and that changes the structure of markets as well. So what you've done, and it was always going to happen, is Bitcoin's now become financialized when it wasn't really. It was still had purity to it. Now, it doesn't mean it's impure because of this, but you've allowed a financialization layer. And what that's going to mean is that they are going to offer leveraged products on it. Now, options are kind of defined risk products, but what you end up with is in a very high volatility product, we get a lot of volatility sellers. Dampens the market because they're always hedging. And that hedging structure can really change the nature of markets. Sometimes it creates acceleration points because everybody's short and suddenly the price goes through and everyone has to buy everything back. Other times, just by the ongoing selling of yield, selling of premium for yield, it slows down the whole market itself.
Raoul Pal offers a comprehensive analysis of the potential trajectory of the Bitcoin market, considering several situations and giving each a probability. Raoul estimates that there is a 60% chance that the market will hit $150,000 in a cycle that is comparatively regular, but he adds in a 20% possibility that the cycle might be front-loaded because of ETFs and other causes, which would lead to a faster rise to $150,000 and a decline before 2025. He also allocates an additional 20% chances to the possibility that Bitcoin goes through a bubble cycle similar to the one that occurred between 2011 and 2013, complete with intermediate peak periods, corrections, and unanticipated increasing rise. He also emphasizes how crucial it is to consider contextual factors, including ETF flows, monetary policy, the state of the economy, and electoral influences when assessing the possible results. He emphasizes the difficulties in accurately anticipating market movements and admits the inherent uncertainty in projecting exact price goals. When talking about the dynamics of the industry, Pal highlights the significant involvement of the millennial generation, citing 110 million Coinbase accounts, though it should be noted that just 9 million of those accounts were active 6 months ago. According to him, there is still a good chance that additional players from the last cycle will re-enter the market, particularly if developments in the blockchain's applications layer, such as NFTs and smart contracts, expand the uses of cryptocurrencies. Pal also discusses the financialization of Bitcoin, pointing out the possibility for leveraged products as well as the addition of options on the ETF. He draws attention to how these financial instruments affect market structure, especially when there is a lot of volatility. Although not fundamentally illegal, Raoul contends that the financialization of Bitcoin adds a layer that has the potential to change the dynamics of the market. He cautions that the use of leverage products and options trading may exacerbate volatility, as hedging operations might cause market acceleration or deceleration through continuous premium selling for yield. In conclusion, Raoul Pal's thorough research explores the specifics of various Bitcoin market situations and provides insights into the variables that may influence the direction of the market in the years to come. Until next time, happy investing.